with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Several Chinese government bodies have recently held mid-year meetings to better support economic growth for the rest of the year. The People's Bank of China pledged to increase the money supply and lower borrowing costs to ease financial burdens and stimulate demand. And to unleash domestic demand, the Finance Ministry committed to rolling out subsidies for personal spending and business loans in the services sector. Meanwhile, the National Development and Reform Commission has announced plans to issue a fourth batch of ultra-long special treasury bonds worth 69 billion yuan or $10 billion in October. At the same time, China is doubling down on emerging industry and innovation, with high-tech and equipment manufacturing reporting sales growth of nearly 10% in the first half of this year. So what's the strategy behind all these moves? And how will they shape China's economic outlook? How will today's policy support lay the foundation for sustainable growth for tomorrow? For more on this, join us on the line now are Dr. Zhou Mi, Senior Research Fellow with Chinese Academy of International Trade and Economic Cooperation, Professor Qu Qiang from Minzu University of China, and also Yan Liang, Professor of Economics, Willamette University. So, Professor Qu Qiang, I will start with you. The central bank has pledged more liquidity and lowered borrowing costs. And last month's Political Bureau meeting set the tone for China's economic trajectory in the second half of the year, calling for a more proactive fiscal policy and a moderately accommodative monetary policy. So could you explain more on that? What specific measures might we see?
Well, I think we're going to see many, certain move will be made in the second half of the year. In America, there is a very short trend that the job market is getting worse. So Federal Reserve have to lower their interest rate to probably by September, at least for 25 base point or even 50 base point. So at that time, I think the international monetary environment can be, more easier. So China will have more of the space to follow this trend to further lower the interest rate and also to start more of the open market operation. For example, the triple R, of course, we still have the further potential to release more of the triple R into the market because in most of the matured economy, triple R is basically getting to zero, but China still have a very phenomenal share in the triple R, so that gives Chinese central bank lots of the potential to release more of the liquidity into the market, and also talking about LPR as well. Well, Chinese government, especially central bank, do not want to lower the LPR's rate too fast and too deep. That is because they don't want the interest rate, spread getting too large. If America stay at 5%, China has been dropping from 3% to 1%. So which means this kind of a widening interest rate spread will cause more of the capital flight. That will be the problem for the systematic stability in the financial market. But since currently Federal Reserve are facing a great pressure to lower the interest rate, and probably we're going to see them by September, so I think Chinese central bank will feel less pressured to release more of the liquidity into the market and lower the LPR. And also we've seen the Ripple market and also the LMF market. We also see further operations for the liquidity into the market, and also structural or targeted policy tools will also be more frequently used, supporting targeted area like the SME, like the green technology, like the innovation, and so on. So I think basically through all these measures, I think central bank will want to encourage banking sectors to, release more of the loans into the market, release more of the liquidity into the market, so that the real economy can be stabilized and further improved.
So, Yan, what do you think about China's monetary and fiscal policy? And when we look at China's economy, despite various headwinds, China's first half GDP grew by 5.3%. This is beating the expectations. So what do you think are the main factors that have helped the economy stay resilient?
Well, I think the first half of the year we have seen pretty strong growth in terms of retail sales. That is really helping to drive up the domestic demand. On the other hand, on the trade front, China also performed quite resiliently. When you look at the export growth in the first 6 months, China's export growth reached 7.2% in the yuan terms, or 5.8% in dollar terms. So in other words, I think, both domestic demand driven by, some various trade-in programs and so on, it helped to bolster the consumption demand. And then on the other hand, we're seeing, external demand is still quite strong. So both help to drive the economic growth. So coming to the second half of the year, I think there are factors that seem to help to, in a way, sort of perpetuate the kinds of confidence and optimism. On the one hand, we know the first half has achieved relatively, robust growth at 5.3%, giving the whole year of the target of around 5%. This leaves a lot of room for the second half of the year. Not to mention the trade truce has been extended again. So I think those are the factors that would help to boost the second half of the growth. But that said, I think there are also factors that could cause some concerns. One is the real estate sector continue to see some slowdown when it comes to the real estate investment. It actually went down by 11.2% in June, which is a faster deceleration from the earlier months. And at the same time, I think the external environment is still quite uncertain. So I think weighing on both the positive and the negative side, I think the political bureau's decision of having continuously more proactive fiscal policy and moderately loose monetary policy is the right approach. And so I think on the fiscal front, there will be more accelerations on, for example, special treasury bond issuance that would help to continue to stimulate, investments and also various government spending to support local businesses. And on the monetary side, I agree with Professor Chi. There could be some potential cuts on the RRR or the 1 year or 5 year loan prime rates. But I think more importantly is the emphasis on the targeted approach to target liquidity in specific sectors like high tech, like service industries, and small businesses. So I think this targeted approach will be more effective when it comes to the monetary policy. And again, fiscal policy will still have more room to play. I don't think there will be extra large fiscal stimulus, again, giving the relatively robust economic performance, but there will be more effective implementation of the earlier, bond issuance quota and so on and so forth to roll out the fiscal policies.
And Dr. Zhou Mi, so China has made boosting domestic consumption a key priority, and the government has a 300 billion yuan bond plan to boost the consumer goods trading programs. So China's service consumption has also grown very rapidly. So how can these current measures unlock the long-term domestic demand, do you think?
Well, yes, as you mentioned about the consumption, I think that efforts of the government is not just trying to have a short-term impact on the consumption abilities, but also are trying to pay more attention on the longer term of consumption abilities and also environment improvement. So as for the supply side, I think that the government is trying to encourage the enterprises to pay more attention about the higher quality products and also something to do with the digital economy, like some of these, the consumptions, the facilitations are, accompanied with digital functions, which can be connected by the IoT, the Internet of Things in the future. So as for the abilities of the consumers, I think that the government is also trying to strengthen their abilities for the sustainable consumptions in the coming years and trying to make a more diversified choices for employment. Well, in this regard, I think that is very complicated and also have a longer term of impact in China. The government is trying to have a better integration about the regions and trying to support the resources to be better allocated in China domestic market. Well, we are strengthening the cooperation with our trading partners to make a better flow and a better support with more resilient supplies on the different kind of products to Chinese consumer market. So in this regard, I would say this the fiscal the policies, as you mentioned about the money, can be allocated to some of the most weakest areas, like for the infrastructure of the consumption, and trying to improve the people's willingness to trying to have a better and more sustainable consumption. So in this regard, it's not only about the consumption in the goods, but also a lot of things to do with the services, tourism, like entertainment, and also the education. So people are trying to do more to improve their abilities and skills in the digital economy to have a better and more sustainable income in the future.
And Dr. Zhou Mi, so how effective do you think has Beijing been in rebalancing the trade partners during the first half of this year?
Well, if you're looking at the data, I think that trade structures is a little bit changed. The trade with United States is decreased, while the trade with other trading partners, including the ASEAN countries and also other countries on the Belt and Road regions, are increased. I think that is one characteristic we have to say, that many of these trade are there because not only from China's side, but also from our trading partner side. They really worried about the uncertainties of United States policies on the tariffs. So they are trying to connect more with the Chinese consumption market because we are not protected with a higher tariff. On the contrary, we decreased the tariffs to the import from other countries. So they want to do also benefit more from China's consumption abilities. But the second characteristics about rebalance on the trade in the structure of the goods, we're not just trying to compete very hard with our trading partners in the area of textiles or the electronics areas. We are trying to improve more new elements and higher quality of products, which is very essential for them to fulfill their commitments on the climate change. So the structure change happened in the geographic, of the trading partners, and also the structure of the goods, which is a kind of, feedback by the markets, and together with cooperation among all the trading partners, including China.
And yeah, so in the first half of this year, we know that the exchange rate of the Chinese yuan against the US dollar appreciated by 1.9%. So how do you evaluate the yuan's, performance, and what role does a stable exchange rate play in supporting the trade and investment?
Right. So I think stable exchange rate is very important because it will affect confidence in the Chinese yuan, and it would affect capital flows as well as the further international uses of the RMB, or otherwise known as RMB internationalization. So I think the PBOC has made the decision to stabilize the Chinese yuan, not to devalue it in order to gain any sort of trade competitiveness in front of the tariffs. So I think this is a wise move because I think at this point, given that China is still very strong in terms of its export performance, and given that I think it's not good to let the Chinese business continue to shoulder the cost of tariffs. And so I think it makes sense not to devaluate the RMB. And I think that again also gives a confidence in the Chinese yuan at the regional level, because many Southeast Asian countries and Asian economies, they are export oriented, and so they're very worried about this kinds of escalating in exchange rate depreciation that would undercut all these countries' trade competitiveness. So I think in this regard, China is really doing a good job in upholding the yuan value and stabilize the exchange rate. That would help to stabilize its financial order. That would also help to stabilize regional trade as well as global trade. On the other hand, I think China is also finding ways to boost its own trade competitiveness. I think on the one hand, as Dr. Zhou Mi talked about, to diversify the trading partners, trade with the United States has gone down, but trade with ASEAN countries, Africa, and Latin American countries have all gone up, with Europe as well. So I think that helped to defeat this whole U.S. tariff war. And on the other hand, I think in addition to diversifying trade partners, China is also finding ways to upgrade its trade structures. So when you look at China's exports, mechanics and electronic products account for over 60% of its exports. So that really gives very competitive strength for China's exports. So instead of using currency devaluation, China is really diversifying trade partners and also boosting its trade value added in order to combat the tariff war. And I think that has been proven quite successful.
And Professor Qu Qiang, so we've seen that in the first half of this year, the high-tech manufacturing sales revenue rose by 8.9%, while the equipment manufacturing jumped by 11.9%. So what does all these numbers tell us?
Well, this number telling us that China is on a sure path towards the higher end economy. Chinese economic structure has been optimizing. As we always mentioned, that Chinese GDP per capita is approaching 13,000 US dollar, which is just one step away to become a middle and higher income economy. So a middle and higher economy always by definition means its economic structure will have more than 50% has been anchored to high technology as well as for the service sectors. Like all the developed economies in the whole world, you're going to see America, Germany, Japan, South Korea, France, and all of them have one feature, that is they all have some certain sectors seizing the commanding height in the whole economy. The commanding height means you have one or two company or one or two industries. They have the highest technology in the whole world. They probably are the champions or one of the champions in the whole world, like Toyota in Japan, like Hyundai in Korea, like the BMW and Mercedes in Germany, like Meta and Microsoft or OpenAI in America. So all these companies representing the highest level in their own area, and China currently are doing the same thing when they approaching this level. For example, you're seeing that the technology-oriented startups are mushrooming very, very, a lot in current years. And also the Chinese mechanics, the machine of the machines, smart building, and the renewable energies, digitalizations, and smart infrastructure. And all this has become the new brand name of China and also become very important pillar for Chinese export. Because if any one country in the world want to modernize their economy, want to have their digitalization, they have to, partner with China. They want to buy machine from China to build their own machine. They want to have infrastructures, especially high-end smart infrastructures like their smart roads, smart transportation. They will have to buy the infrastructure from China. That make China seizing the commanding height in this area. That's the reason why when the whole world is experiencing a lot of the turbulence, Chinese economy, especially in the export, are still very resilient. And also a lot of people say, okay, there are inflation in here, the whole world is slowing down, tariff war. Why people are still trying to buy things is because most of this country, they understand, especially in current tough era, if they want to survive, they have to upgrade their own economy. And when they have to upgrade their own economy, they need to partner with China. That's a very simple equation. That's been telling that China has been upgrading its structure, and also China is helping the world to upgrade its economy. So that's the contribution China is making to the rest of the world.
And Dr. Zhou Mi, so we take a look at the high-tech manufacturing sector. Take the robotics industry, for example. In the first half of this year, the country's total output of industrial robots surged by 36%, while the production of services robots jumped by 26%. So what is driving this momentum?
Well, I think that there are several factors. The first of all, that the market is reviving. We know that China have a super large market, and the market is there because that we have a large population, and together we can provide so many different scenarios. It's very important for the companies to explore more possibilities. And the second, we know that China is very open on this new technology. We encourage the policies. We also trying to establish a more transparent regulatory environment, and this environment environment is very helpful for the companies who want to do a longer term of investment and give some return. And that also provided so many kind of, the leading areas in some of the very important area like the artificial intelligence for the autopilot, for the driving, and also the many new areas. This provides so many possibilities. It's very complicated in China about the structure of the industries, and that provided so many possibilities for the interactions between the different subsectors in China. And the third one, I would say that the cooperation between Chinese companies and our foreign partners are very friendly. So in the previous decades, many foreign companies come here to China. They enjoy the benefits of the much more affordable labor cost or some kind of other environmental cost. But now they are having more connections to do with the innovation abilities. The higher education students and the labor forces in China are so plenty, and they can come here to join the many kind of different scenarios. So this cooperation and the relations are really reflected some new possibilities. Like we see that USCBC, when the delegation came to China, they gave us more advices on how can we do better about the regulation improvement and how about some new areas, administrations. So the cooperation are widespread in different aspects, really providing so many new possibilities for the companies, no matter from the global multinational companies or some small and medium-sized enterprises. If they have the willingness, they have the technology, and they have the abilities, they can come here to try to find some certain market, and they can even expand this market to the global market.
And yeah, so both the US and China are pouring lots of resources into AI with robotics. So how do you see this competition? Where does each country have the edge?
Well, I think for the United States, we know that in these days, the robotics industry very much rely on the AI application. So the United States is strong when it comes to AI chips. Companies like NVIDIA was able to manufacture the very, very high-end GPUs. So that allow, the AI technologies to be developed and also to be applied, integrated into the robotics industry. But I think China has its own very much advantages. And in fact, I think according to Morgan Stanley's latest report, China is actually dominating in the field of AI-enabled robotics and humanoids or otherwise. Because I think for one, China's AI industry is also developing, by leaps and bounds, despite, the relatively lacking in computational power due to, still somewhat lagging in the AI chips. China's DeepSeek's launch and many other, large language model have showcased, China's AI technology is also very much in the lead. Not to mention China holds right now AI, 60% of the global AI patents and also have, over half of the global AI talents, according to Jensen Huang of the NVIDIA. So, on the technology front, I think, China is not really lagging much behind the United States. And on the manufacturing front, I think China's supply chain is very complete and mature and robust. So when it comes to manufacturing power, China is definitely taking the lead. I think you just mentioned that China's industrial robot has grown by 36% so far this year to reach 369,000 robots. And on the service robots, that manufacture has also gone up by over 20% to reach 8.8 million robots. So all of this just showcase, the manufacturing capacity in China is vast. And so what that means is that it could quickly reduce the cost. When you look at the unit tree, they're able to roll out a robot that costs only $5,900. So the kinds of large-scale production and cost-effective production are going to provide a lot of user cases. So robots now are already adopted in 70 industries in China, and more in service sectors as well, performing tasks ranging from cleaning to delivery. So I think in that case, with the high tech, with the large manufacturing capacity, and with the very large and growing user cases, I think all of this would help China to gain competitive advantage in that robots industry.
And Dr. Zhou Mi, so the U.S. imposed the acts of controls and high-tech restrictions on China, including the AI chips. So why has this not impeded robotics innovation in China?
Well, I think that the innovation are coming from the markets, especially when there are huge market demand. I think that China is a really important possibility to support the innovation to do with this kind of new technology front page. I would say that when we're talking about the manufacturing, China has many demands from the manufacturing when they are trying to improve their abilities and the efficiency and also reduce the risks. So the robotic has a long term of development already in China, but now they want to provide more to the families. That is a little bit similar but different scenarios. So we have the basis for this kind of creation or innovation. And second, I would say that Chinese companies are trying to develop their technology. Even many years ago, when they started to do that, you can find that some of these Chinese company has bought the company from the European Union, from Germany, and they have improved their abilities by the cooperation of this investment. I think there are also a lot of new areas that China is trying to catch up with our foreign competitors, and this robot is one of this field. And the third one, I would say that it is not only about the manufacturing aspect, it's also about the integration, about different elements. Chinese companies are benefited from the education abilities of the people, and they are also benefited from the government policies to trying to support them. So in this regard, I would say maybe we are still not the leading country in these very specific areas in all the related supply chains, but we are already able to provide the proto models for this kind of experiment. And based on that, we have created so many platforms, like we have the marathon for the robots to compete with each other to improve their abilities and efficiency. I think based on this kind of practices, we can accumulate the experiences and do more to improve our abilities to be suitable for different kind of scenarios.
Well, we're speaking with Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, Professor Qu Qiang from Minzu University of China, and also Yan Liang, Professor of Economics, Willamette University. And that's all the time for this edition of Biz Today. To listen to this episode again or to find more previous episodes, you can download our podcast by searching for Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.